Good morning, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here in Chicago on June 23rd. Giving you some commentary here in the energy markets. Let's get started. Crude prices starting off the overnight were quite a bit firmer. Taking a look at that August contract, we were really in a bit of a rally mode. We opened up a lot firmer, 107.42, hit a high of 107.45. And since that time, market's been basically under pressure. We're now trading down around 106.10, right near the lows. And I think a lot of the reason for that, you look at the price action there last week, and we were kind of in a bit of some consolidation. A lot of fear premium, I think, in the market. A lot of uncertainty with the stuff going in Iraq and what the U.S. involvement may or may not be. So I think that's kind of initially what got the market firmed up here a little bit, as I do think there is a bit of that fear premium. And I think we're seeing a little bit of that come out. We got some. You look at some of the data that came out over the weekend, China, some better than expected manufacturing data, but then you look at European manufacturing data and a little bit weaker than expected there. So I think those two kind of canceled each other out. Something important to note too, I think, and I've talked about this in a lot of these posts, check out the WTI Brent spread. Last week, we were at around about $9.40. We've kind of seen that narrow back here down to around $8. So I've got some thoughts and ideas there. If you're interested, give me a call. We can talk more about it. The rest of the complex is looking a little bit weaker also. Nat gas is off about 6 cents. We've got heat off about 2.35 right now, and the RBOB's off about 2 cents here. So certainly a bit of a weaker tone. Equities started off firmer as well, and we've kind of seen that reverse here on the day. So that's got a weaker tone here this morning. And again, something I've talked about in so many of these posts: inventory numbers. Take a look at our total stockpiles. While we're not running at record highs, we are running, according to the EIA data, we're running just underneath records amounts for this time of year. And so, when you look at also what our daily and our monthly production numbers have been here in the States, I mean, we're seeing it kind of increase here, basically. So, I think if we stay on this pace here, what we're going to see happen, especially as the demand still remains up in the air, once we see some of this fear premium come out of the market, I believe oil prices are going to sell off some here. Possibly first target down around the 50-day moving average, which is coming in here roughly down at around about $100 a barrel. So I think there is some downside room to be had in this market. But again, you've got a major geopolitical event going on. And when you think about oil prices and the dynamics of how that market trades, when you have something like this happening, it can cause prices to move up for a period of time. But at some point, I think that the inventory, the supply side will catch up with it. So if you're interested in hearing about some ideas, I've got some strategies to consider, take a look at. I want to talk to you if you're interested in learning about how to play a ratio put spread. I'd like to fill you in on the potential risks and rewards there. It's a pretty interesting way to approach the market. Give me a call, shoot me an email, we can get into more detail. Futures and options on futures may involve substantial risk and may not be suitable for all investors.